Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Thursday, May 20th. Another exciting day in the silver market, as they all are at this point, especially when it's kind of like if you were sitting there and you knew, perhaps like Harry Marco Polis, that Bernie Madoff was running a Ponzi scheme. You can just look at the forensics, go when it goes, but on the surface, seems like not much is happening, but as my friend John Lee has talked about and illuminated many too, there is a lot going on in the silver market, which is why so many of us are so excited. So, John, nice to see you back on here. I'm blinded by the brilliance of that silvery backdrop behind you. Looks like you found something big this time, huh?
Well, I can't get enough of it yet, Chris. I think the premium on silver coins are up to close to 50% now. You can't get a coin less than $45.
I thought that was all just conspiracy, that there was anything unusual going on in the silver market, John. Am I missing something yet again with my Wall Street background that I can't see? And again, here's John Lee of Silver Elephant Mining Corp.
Yeah, well, Chris, you know what? If you were to look at the market in palladium back in around 2018, there are some parallels to today's silver market where there's a physical shortage of palladium in the market. And what you see there is a disconnect between the futures price and the actual physical price of changing hands. Because whatever that's trading on the futures market, people can get much of it, and it becomes just the benchmark, but not the actual price is trading. And Chris, you and I had alluded many times in the past, and it's being documented by other people, that the quote unquote spot market in London is really not much different from the futures market. It's one of the same. And that's why a lot of despite all the robust physical demand, you have bullion shops that are closing their London branch because there's no physical available. And that's another reason you see the COMEX physical withdraw from the COMEX market, despite there is a premium on COMEX relative to the London spot. So all the signs, Chris, is very clearly pointing to the shortage of physical silver. Maybe not to the extent of saying, you know what, literally they're running out of mint to cater to the retail. As we talked about, I think that's just more about the government discourage the ownership of silver to the retail people. But I think they make no mistake in looking at the volume flow of PSLV versus SLV. The public is catching on. First time was shit on us with what happened on February the 1st. But not all is lost. I think that the physical momentum is just going to continue to carry on. As I mentioned before on your show, once a month, it's between that 24.5 and 27.5. And we have clearly broken out of 27.5. So that momentum is going to slowly to start to build. And I think it'd be hard priced for me to see. I think it'd be very hard priced for the silver market to be bottled back below 27.5. But the judge is still out there. I think the next few days is absolutely very critical.
Yeah, John. And you mentioned the buying activity. I'd be curious to get your opinion on this whopper that came out. And in today's theme of, we're going to address the question, what is it going to take for silver to get above the $30 level? I'll let you go first, although I do have the belief that I think maybe this is exaggerating a little bit. My guess is that once it gets through 30, it may as well be through 40 almost. I think that the way the market structure is set up, as the CFTC illuminated us to, and also, we've seen glimpses now in the last year, people have been doing this longer, 2011 or the old timers. John, were you around for 1980? How old you look? I think you're older. You've got that youthful look, so we can never tell, but you see when the price finally moves a little bit, all of a sudden, whoa, you get like CNBC talking about silver. But here's a question I have for you. This was from the LBMA's recent report. They're talking about after that surge, end of January, early February, they had 360 million ounces left. Fears emerged. This isn't me exaggerating. This is their damn report. Fears emerged as to whether there was enough silver should the demand continue. it would have only been a matter of weeks before London's existing stock was used up. So I see it tied together because my guess is that at the same time, metal is actually like becoming even more unavailable. And then when it goes over 30, any thoughts on any of that, how that all ties together?
Well, Chris, we talked about what back in July during the Silver Fest. I think it was August, almost 8 months ago at your Silver Fest, and I was actually talking about the problem with the LBMA and physical market in London. So I mean that is just rearing its ugly end, and with the 360 million ounces of potentially available. Okay, so we don't even know whether that 360 is already spoken for. By in the forms of an ETF or other physical buyers already, where of which this allocation is already given to. So I think the silver premiums in the physical market relative to the spot market and futures market is already a very clear indication that there's a shortage in silver. But eventually, the proof is in the pudding. That the way to see the tightness of that would be the eventual breakout of the silver price, not only in terms of the physical market, but in the futures market as well. As is singing palladium back in 2018, when the price of palladium, I remember, went from $1,100 to $2,000 in less than 12 months. And I think similar scenario is going to happen. I don't think that the $30 is the support, the critical resistance level. Rather, I think the critical resistance level is at around 27.5, where we're sitting right now. And that's why if you just see the silver price on the hourly candles, you can see a lot of the jerky movement. I mean, it's clearly somebody is there's a lot of struggle going on between the buyer and the sellers. And I just don't think that this, unless you're a supplier of silver of unlimited quantity and you got another wonderful investment opportunity to attend to, there's no reason to be selling silver at this time for the suppliers. So, I mean, and then if you just look at the trends of every time, I mean, the 30 is like it's like a stove, it's just like it get bounced off in already one, two, three, four times already since in the last 12 months. But it's really sort of when the silver passed $27.5, $28. I mean, that's when the actions kick in, right? So the $30 was more. It was the last last line in the sand. But as I mentioned, I think the next few days is critical for the silver to stay above 27.5. And if it were able to do so, then time is going to be on our side. Because once they let go of 27.5, 28, I think that $30 from where I read my charts is actually not that critical level. The critical level is where we stand right now, Chris.
Okay, and would that explain why? I mean, some unusual looking charts. I don't remember in the entire time I traded equity options ever seeing a volatility distribution quite like silver, although that's why it's good to always be learning. But here we see it was above $28. And then there was some supply and demand shift that I was not able to ascertain, dropped it like a rock down to 28. Here we see getting close to that 27.50 level. Is that just because there's a lot of technical paper trading going on here and we're seeing, that, I mean, I guess it's to be expected, which is probably the best way to approach this?
Yeah, well, Chris, the market, silver already took out 27.5. So from how I read it is the cartels are trying very, very hard to put the genie back in the bottle, but hasn't been able to. Now, there has been a lot of volatility, not just in the silver market, but if you look at copper, right? Copper went down around 3% in the last few days. And you have the cryptos that are also doing a bit of loopy, and there's a lot of volatilities there. And there is some
I apologize for interrupting, but those crypto guys, they should have listened to us, diversifying a little bit out, but they had their Bitcoin at 50,000. They didn't want to hear from Silver Boy. So
you know what, Chris, let's just focus on silver. But I think there is some collateral damage from the crypto guys because there is some cross overlap between silver investors and crypto investors. And then so I think there is a lot of volatility. And then the equity market also has a bit of the VIX has gone up and down in magnitudes not seen in the last several months. So it's natural to see silver moving in along with the market, but where sort of things get really strange, Chris, are the days where the dollar takes dive, but silver was non-reactive. So these are the times that we pay particular attention. And with the dollar index now is below 90, that spells a very bullish, buoyant sign for silver. We talked about the boat moving and with the dollar as being headwinds. So now we got tailwind with silver, and couple with that the copper is still, despite a recent setback, still above its all-time resistance. I mean, when copper took out its all-time support, all-time high 450, right, it's a very decisive breakout. And also with gold, now it's over 200-day moving average at 1850. So you have a lot of these commodity prices are taking out their 200-day moving average, and also that the dollar weakness bode very well for silver going forward. Now the caveat is, Chris, you're going to see the cartels, usually maximize their limited resources and the physical inventory available. They would exert their maximum pressure at times on Fridays or on a long weekend, such as one week coming up tomorrow on Friday, because Monday is a holiday in Canada, or on days where the dollar has a bounce, either because of a lackluster economic outlook or data, or the Fed talking up of raising interest rate, whatever it is. That's when they come to out of the woodwork. So I try to put the genie back in the bottle. But I think increasingly it's looking increasingly very, very difficult for silver to go back to that important resistance level of 27.5. Now is acting like a support level. And just quickly, silver was almost $29 and went back to 27.5 briefly yesterday and had a very quick bounce back, right? So all the actions look very, very healthy. In the end, it's actually the lower. You want to see that lower. You want to see the support level for silver keeps going up, which is what we see right now. And I think the 200-day right now for silver is around 26. So I wouldn't be surprised of a very sudden setback for silver to 26, test the 200-day maybe once or twice. It's possible, but increasingly looking unlikely. I think we're going to stay above 27.5 for maybe a few more days. And then if all the players see that the dollar is here to stay below 90, and for gold to sort of continue to move away from 200-day of 1853, and copper to continue to stay above all-time high of 450, then you're going to see a lift off on silver. And I don't think $30 is that much of a resistance. I think right now is actually where all the stakes are at.
So we are in the heat inside the kitchen now. We don't even have to wait. John, I understand. I mean, it's weird. We have a market where the fundamentals really don't matter unless they're in a headline in the right way. I've been told that some of these hedge funds, there's not even a human. It just scans the headlines and reacts. Are these the kind, and you mentioned some partly to that effect about, something coming out. So, for example, we saw a 4.2% CPI print. I didn't know the BLS's calculator went that high. Then, and apparently, I'm honored to be alive while investors are finally not buying that transitory line the Fed pulls out every couple months. Here, JP Morgan saying ditch Bitcoin, return to gold. Unusual commentary. And then another sign here, John. I found this interesting. This is, let us go back. Basically, if you look at the inflows, we can see metal coming out of the COMEX. Looks like there was an inflow recently. This had been negative coming out of SLV while we're seeing metal going into Sprott. Are these the types of things that could catch people's attention and perhaps serve as the spark for a move out of the current range?
Well, I look at volume and price trends, which is all encompassing and telling of the supply and demand. If you look at commodities, and we talked a few times before, in a decade, it might only spend 10 to 20% of the time going up, 7 years sideways, and you got some very sudden downfalls. So, recall, Chris, for copper, for example, let's talk copper, which is a sort of inflation gauge. In 2001, 2002, it's been stayed 70 cents for the longest time, and all of a sudden, boom, went to $2, right? And then there's another rise in copper. I think it was around 2008, 2009, right before the financial crisis. It went from around $1.30 at the bottom all the way to zoom to $4 at the peak. And that $4 we endured for almost a decade. And now we're into another bull market. I think from the pandemic low of around $2.50. And the target right now, a triple hat trick, just like in the past, from 7 cents for 70 cents to $2, from $1.30 to $4. Now we're starting from around $2 to $2.30, and we're looking at around. I would not be surprised if it get close to high sixes. And usually when it does, it's almost like an epiphany moment. It will just go, and and the same for the real estate market in many ways. So after they reach that equilibrium point, they're going to like a lot of volatilities, but you're not going back to the days of $2 silver and probably $20 gas again. And such is very, very clear. I mean, if you look at from the supply side, let's not even talk about the pent-up demand of people that are being holed up in their homes for more than 12 months. But if you look at from the supply side, I mean, with all the geopolitics, with all the COVID transportation logistics disruptions, and all the safety protocols, for us to be exploring in Bolivia, we have to buy safety equipment, and people got to take their breaks and social distancing. Our exploration cost has gone up probably 50%. And to talk about drilling now in Manitoba, in Canada, where there's a COVID restriction, right? All these guys are taking maximum advantage of their scarcity to price gouging. And this is not going to go away, Chris. This is very much a replay back in 2000 when China was vacuum up all the commodities that there is. And this time around, we got a bit of a double whammy, not only in terms of the pent-up demand, but the supply side, there's a big disruption on the supply side as well. So I think just another quick note, Chris, I see the chance of silver taking out $30. Last time we said about 3 chocolates and 1 vanilla. And now I think we're probably like 6 chocolates to 1 vanilla now. Why? Because of the imminent collapse of the crypto. We talked about crypto a couple of times. I remember 5 years ago, right? Some of our guys, my investors, my friends, to say, hey, they were selling gold to buy crypto. But now people are going to be gun shy about looking at crypto twice. So before we're fighting 2 wars, one against the cartels and one against the cryptos, which is siphoning money away from the metal investors. But now we have the crypto guys are realigning themselves, investors, to gold and silver. So now we're going to have 2 wars, both just one to fight. Granted, it's not easy, but at least it makes the life slightly easier.
Yeah, and making a note, I'll have to. I'm almost ready to start rolling out my YouTube ads, so we'll have to talk once I get south of the border, which I say would be within the next month. We'll have to find some crypto conferences to go and tell people about silver at. And John, another thing that you mentioned in there that I think was quite brilliant, as is usually the case when you're on the show, you talked about the prices that you're paying for things and that mining companies are paying for things. Here's the lumber chart, and you see at least so far, now this goes back to 2020, so that's a year not seeming very transitory on a yearly basis here. I know these things happen gradually or sometimes quickly, but these factors all build. Input costs go up. That means there's less money going towards getting silver out of the ground. Taxes go up. Joe Biden, I mean, if he's going to grab $2 trillion in overseas profits, I don't know if he grabs it from the mining company. All this has the effect further reducing the supply and
not just
again,
lumber. Not just lumber. If you look at corn.
Actually, why don't we look at the inflation in the physical silver price, which you mentioned before? Here is the random year American Eagle, 41.92, spot price 27. So there you go. Perfect math. $14 over spot on $28. That's a 50% premium. Even
doesn't make sense.
Real silver is increasing.
Doesn't make sense. And you know what, Chris? One other thing. There are in 2011, when silver made its prior peak at $50 an ounce, there were 10 million millionaires. 10 million, okay? 10 million people worth $1 million. Today, there are almost 50 million millionaires. So, there are 5 times more people with discretionary spending to invest in silver than they were 10 years ago. So the $40 you see today is not the same as $40 it was 10 years ago. And so I just don't want to get even caught up on the absolute value of silver. And I think it's an absolute bargain to be had, Chris. As I mentioned, I think the $30 level is going to be taken out as imminent. And secondly, I'm stating on record as saying that certainly before the end of Q2, because of the dollar weakness, the deficit spending, the inflation, supply disruption, the realignment of the crypto investors. And after $30, it's game on. Nobody knows really what's going to happen. If you look at gold, it's already taken out 1850. I think a lot of where the next silver target is going to be dependent on where gold is going, where copper is going, where oil is going. And I think it's going to be one of these exciting times you're going to live through to tell your kids.
Yeah, John, and you mentioned the pricing. It's interesting. The other night I was out walking Silver Dog and we got some pizza. Got 3 slices from a food truck. He was hungry. Came to $17 and I gave a $4 tip.
It's ridiculous.
And I was thinking, because I've had this idea, I guess, and I don't know if I've mentioned this before, but it's my price of a slice index. Because I remember when I was in grade school, let's say 4th or 5th grade, let's say 1988, 1990, we would go at lunchtime to the pizza shop and the slice was $1. And, when it would be like, you go to pay $2 or $3 here or there. But now I'm like, all right, we're 7x since, let's call it, in the last 30 years. I am not feeling the transitory nature, but in either case, John, before we wrap up, I know you've had some recent news out on Silver Elephant, and perhaps you could let folks know what's been going on there.
Yeah, Chris, there's a labor supply shortage in Florida because why go to work when you can collect for free? I tell you what the problem is, Chris. Once people get their entitlement, like Obamacare, like the welfare, like the Medicare, they're not going to let go, Chris. So you're going to see a lot more welfare, and that's what the states are for. And you're going to see an increasingly labor shortage. I remember back in my, now in some parts of the United States, gas is $7 a gallon. When I was a student back in 1993 in Texas, in Houston, I remember at times you can get gas for 99 cents a gallon. And, now it's 7 times more. Nonetheless, we're definitely into inflationary era, and we're going to have reflection of, these kind of things caught up very quickly before they get settled. They don't move linearly. Now moving on to, and that's the reason that Chris, I come on your show, is we really sort of had deliberately internally for Silver Elephant, we're repositioning and returning the company as a pure silver investment vehicle. We've heard our shareholders very loud and clear. So we are spinning out our non-silver assets, first of all. And I think it's very exciting because the existing shareholder is not going to get one play, but up to 3 plays. Eventually, spin out most likely the existing shareholders are going to get the spin out shares as well. So that's very exciting development. So that all the money that goes into Silver Elephant will be dedicated towards exploration of silver. And then secondly, just this morning, we put out the news release. We made a major interesting discovery from our geophysical survey. So Chris, if you look at the map, just right in the middle, smack in the middle of the first map here. So you see the white circle there, the white dotted line, that's where the historical mine production from Pulacao came from. That's where the existing 109 million ounce indicated silver was assessed and verified. We find this anomaly, Chris, you saw on the map. That's 1.5 kilometer. That's huge, and it's such a close proximity to the existing deposits. So we hypothesize and we speculate, and one explanation possibility would be that the vein was forked off at a much deeper level, and it manifests into another system that is very close to where the existing system is. And looking at the strike and the signature and the intensity of the anomaly, it's 1.5 kilometer in strike, and the intensity is very, very high. That this is not, I don't think this may not be your typical household small epithermal veins. It could be potentially a fairly big system. So we are, we've been scratching our head in the last 10 days trying to figure out what it is. And we will be, once the survey completes and we compile all the results and interpret them, we'll be setting our rig there, and then we'll be looking to drill this target as quickly as possible, probably right after Canada Day, July 4th. And so that could mark a very exciting chapter for the company. We don't know what it is, Chris, but we're hard to be thinking that is something sort of arbitrary. This is a very, very big anomaly, to the tune that the guys that do the surveys was seeing a lot of different projects, hundreds of the projects see this one as something quite spectacular. So we're very eager to wait for the completion of the survey. Once the ground crew depart, then the drill crew can set in. So it could represent something pretty exciting. It could be game changing. But then again, Chris, it's kind of like silver movement, right? This is going back to the chocolate vanilla analogy. Until the rig set in, until we see the core, until we get the assay results, we really don't know what that is. But it does look something as exciting as I've seen in my 15-year exploration mining business, in the history of my mining and exploration experience.
Well, and that's certainly, it's exciting when you find something, and also, but what you said earlier that, I don't know, something I've found helpful thinking about in recent years, where, we'll find what you find. With silver, the price is going to go when it goes, yet yes. What we have control over is how we respond to the decisions we make each day, and preparing our team, doing the things that can put us in place to find and know what to do with it when you find it. So in either case, congratulations, John. And I think a lot of people will be excited. I guess there's other assets you can get than silver, but especially understanding that, even the silver companies, it's not 100% silver. So I'm excited that you're going in that direction. And
Chris, you know what? A lot of people, some of the other companies you feature, and they're fine companies with good management and competent people managing quality project. But usually a junior company, they marinate one idea and one project over extended period of time, right? Before it maybe a hit, maybe a dud. But in our company, we're about churning, we're about wholesaling. We have 5 or 6 or 7 ideas every year. So we try to turn our assay results out quickly. We try to move on. So we're not going to sort of dwell on ideas of which we don't think are worth pay attention to. And the lady of good luck, the lady of fortune favors man with action. And that's what I subscribe to. So we look forward to sharing our findings very soon with our shareholders and with prospective investors. Chris?
Yeah, actually, it's funny you mentioned that. In my code breaking book, David Kahn was mentioning sometimes doing anything, there's sometimes to sit there and wait, but at least if you're going the wrong way, the sooner you go the wrong way and realize you're going the wrong way.
You got to change course. Yes.
So I appreciate that. And John, just as we wrap up, what's the best way for folks to reach you? If they have questions on any of the recent news or the deals, how do they do that?
Come to me at just go to Twitter. That's the best way I would say. Thanks to you, Chris, raising our profile. I think about 1,500 Twitter followers. So just go to Twitter and search John Lee, Silver Elephant. I see the market like it is. I used to speak at many different conferences and appear on televisions and articles and whatnot, but now I don't have time. So I tweet quite a lot and tell the market like it is. Unlike some of the other perma bulls. Come to our website, silverelephant.com, or you can go to Twitter and Google Silver Elephant. You can see probably 10 or 20 interviews I've done just this year.
Well, John, I appreciate that. Appreciate what you're out there doing. And I think there's some exciting times coming in silver. We'll see how long it takes, but fortunately,
don't trade yourself out of your position, Chris. That's the only thing I would have to say. Don't trade yourself out of your position. Like the reminiscent stock operator, he knew a lot of people that knew exactly the time to get in for the maximum profit, but invariably these people never made a lot of money because they traded themselves out of their position. Now is really the time to sit tight.
I think you're completely right, John. That's the essence of what these banks have been doing, running pump and dump, where they jack it up, jack it down. People get stopped out. The price, starts here, goes up, goes down. Price didn't move, but people get stopped out. That's Chris, what Wall Street's doing.
Absolutely. And you know what? I totally agree with you. And that's why you're not seeing silver going up 0.5% or 1% a day or 2% a week. That would be too easy. So the only way they will shake you out of their position, fledgling bull market where you're seeing higher lows and they're on the verge of breaking out to important resistance level already has, is they're gonna trick you up 3% on a day, and they're maybe even chipping in on the upside, and they're gonna smash you down. So you gotta be accustomed to 3-step forward, 2.5-step back, another 5-step forward, and 3.5-step back. That's the only way for them to shake you off your position with that volatility. So you just gotta sit tight, Chris.
I agree. And I mean, if you want to be like the guys in The Big Short, you got to go through the adversity if you want to have the fourth quarter comeback, you got to fall behind a little bit. And I don't know, geez, I'll tell you what, John, if nothing else, let's say somehow silver never broke $30 in our lifetimes, probably what the mental fortitude you gain in having the patience to handle that would be so profitable in the rest of your life anyway. Although I think silver is going to go well past 30 sooner than later. And either case, look forward to following along with you. Appreciate all of your support of the show and going out, finding silver and just everything you stand for. So I thank you.
Best of luck with the endeavor at CFTC. Keep us updated.
I sure will.
Somebody may be out of a job soon for talking too much.
What's that? Side.
Somebody may be out of a job very soon for talking too much on their side.
Well, they missed my cutoff. I'm no longer, I said that they had until whatever date it was in the letter. That was when either I'd help them or if they can't speak for their actions, now game on. So now it's game on. And for all the people who've supported that, I thank you too. And John, we'll look forward to catching up with you again soon.
Thank you, Chris. Be safe.
Bam. Oh, wow. Even getting my, the stop button didn't